This is Peter Arender. I'm Chief Investment Officer of Fortress Fund Managers. It's been a week where boring has paid. The last week to week and a half, some of the frothier, highest value darlings of the market for the last 1 to 3 years have had a period of pretty big volatility and some corrections in the last week or two. Meanwhile, back here in the real world, the boring, reasonably valued kind of companies that we always own have had a very, very strong time in the last week or two, and it's meant that we've had a very nice start to the year. So for our investors, what it means is just the slow and steady has had a nice week or two, and we think there's a lot more runway for this to go as the world continues to get back to normal. I think some of the higher valued stocks, nothing wrong with them as operations necessarily. It's just the prices being attached to them are quite high, and we always prefer to be paying attention to what we're getting for what we're paying. And that's what always takes us to reasonably valued parts of the market, such as in the US, stocks like Intel and Berkshire Hathaway and Foot Locker and Walgreens, Boots Alliance, and so on. Everyday companies that are earning reasonable money and that you can own at a reasonable price. So we're still quite constructive on those kinds of companies, and kind of week where we think boring is good.